Hello guys and welcome to Hakmen Traders. In this video I will be showing to you how to trade with the help of candlestick psychology. Now trading with the help of candlestick psychology is sometimes can sometimes be quite difficult because it is very difficult to understand. Now in most sorry it is sometimes difficult to know what are the traders up to. So sometimes in a candlestick psychology what happens is that you'll have to read the candlesticks itself. Reading the candlesticks, I've made it easy for you guys to so that you guys can learn and benefit from it in your future trading. So to better understand the candlestick psychology, let's get started with the video. Now as you can see right here, I've picked up a random chart. Now at this place, this is a support level. Let me mark this out. Instead I will mark this. Now as you can see right here, I'll take this candlestick because I've invested in this part. This was my entry point. Now at this level, what usually happened is that the candlestick opened right here. These three candles were bullish, more than bullish, you can see heavy bullish. So at this point this was also bullish, but the bulls in this candlestick were tired, so they pushed the market downward. The bulls gave a try once more and pushed the market upward, closed at this point, but the bears ultimately won. So the bears won at different intervals. Now at this point, when the bears were pushing the market downward, making the market bearish, so at this point you can see that the bulls jumped in, saying that this is a price too low to pay, and they pushed the market upward, and again they did the same here. But this candlestick, you see this wick, this is not real. This is very low at this. It closed in the real time for 21.06. So it closed for 21.06. Let me so yes, right here it closed right here. So at this point this is the real closing area, this area, because this is 15 minutes later. It shows the data 15 minutes later, so 15 to 10 minutes later. So this one this is also a bullish candlestick, and this now became bullish, so this market would move upward. Now let's demonstrate some other candlesticks. Now you'll have to learn at different intervals that how candlesticks are at different points are interacting. So in this case you can see major price rejections. Now the bears pushed the market downward, but the bulls again gained control of the market and pushed it upward, pushing up at this point, but the bears jumped right in and pushed it a bit downward to this point. So this is also another form of. Now on this way, as you can see, a candlestick shows that there is a fight going on between the bulls and the bears. So the bulls are fighting to gain control of the market, and the bears are doing the same as well. So for this case you can see that, you can see right here that both the bulls and the bears at different points are fighting to gain control of the market. Now at this point you can see that the bulls actually pushed the market upward, but they were exhausted. So the bears jumped in and they pushed the market even downward up till this point, and then the bulls now jumped in. Now let's see what happens next to the bulls when they when we are trading in the stock market. So you can see that up till this point the bulls are now have now gained control of the market, but we will see how far it goes upward, because this is at its downward. I haven't pulled up indicators, moving average and parabolic SAR. I use these two. It depends upon you which one you use. So according to my how why I invested in this stock is that on my assumption that this would go up. Now you can see this is below the 200-day moving average. Now I've learned that when this stock is trading below the 200-day moving average, buy in that, invest in it, or buy that stock and sell when this when it is above, trading above this moving average. So I've learned this and now I've applied this to my trading. Let's see what happens next. By the way, I will give you results further on in my future videos, so stay tuned and please subscribe to my channel. So again, back to the main topic. You can see at different points there are many examples lying there which are there is a fight between the bulls and the bears. Now at this point, this is a morning star. The bulls, now what this candlestick mean is that after this candlestick the market would turn bullish, and it did. So if this candlestick appeared red or green at the top, it would be an evening star. You can see this candlestick would be right here. This would be above, and a bullish candlestick, this evening star, and a bearish candlestick. This would mean that the market would turn into bearish. So it means at that point this thing, and there are various now this also known as the three black crows. It means that heavy bearish market. Now three green candlesticks, three bullish candlesticks means three white soldiers. So that means that this market is would become bullish. Now at different points you will have to know the situation of the traders, of the investors, of the traders, where in which case what is happening. So you'll have to know that, you'll have to acquire knowledge about that. And you can see this was a bearish market, but at this point the bulls interacted and they pushed the market higher, but of no use because they were exhausted at this level. So the bears were now ready to gain control of the market and they pushed the market downward. So at different points you will have to keep in mind and know that where the market is heading. So for this reason you can see that it was at its high for most of the time. So at this point the bulls were now exhausted, you can guess from this point, and so the market pushed downward. So the bears gained control of the market and they pushed the market downward at this point. From here you can see bulls again gain control of the market, but they show weakness. Now at this point let's see what happens next. At this point again they showed push the market upward. Bears gain control up till some extent, but the bulls again gain control of the market, and let's see what happens next in this particular stock. At each point in this in a certain stock you'll have to recognize each area of where what is happening. In most of the cases the market is bullish, but bears interacted. Now at this point the bears interacted. This area is known as correction or pullback. Both of these can be considered. You can see at different intervals the bears interacted, but overall market was bullish. Now in this case this was a type of range bound market. You can see it is moving in a range, so this could be known as a range bound market. As you can see, a range bound market is that market in which the market is trading between two different points, a highest point and a lowest point. So that is known as a range bound market. So whenever that type of market occurs, what you can do is you will have to point out your support and resistance level, and from that you will have to know the candlestick psychology. Besides this, I've shown to you how the candlestick psychology can be read. So from this you can further on proceed with your own come up with your own candlestick psychology. There is no own candlestick psychology, but by looking at it you can guess where the market will head. So you can see now this is bullish, so I'm waiting for it to for the next trading day to show me what will happen next. So, and that's it for today. Hope you guys are enjoying my videos and want to learn more about the stock market. All I need you is to support my channel by hitting that subscribe button and comment down below, as your feedback is valuable for me. Goodbye.